Hello and welcome to Explain the Charts. Today, May 21st, 2025, we're diving deep into AUDUSD, examining both the latest news and technical chart data to help you make informed trading decisions. Recent headlines indicate significant pressure on the Australian dollar, driven by expectations of dovish moves from the Reserve Bank of Australia. There's growing speculation that the RBA might aggressively cut interest rates in response to new tariffs imposed by U.S. President Donald Trump. ANZ Bank analysts even suggest possible rate cuts in the upcoming May, July, and August policy meetings, potentially including a substantial 50 basis points cut in May if global growth deteriorates. Adding to the pressure is the looming threat of a U.S.-China trade war, with Beijing threatening tariffs on all U.S. imports. On the technical side, we'll analyze key price levels, trends, and potential reversals to navigate these turbulent times. Let's start by looking at the daily chart for AUDUSD. We can see a recent downtrend, but it's important to put this in perspective. The daily chart shows a recent series of lower highs and lower lows, confirming the short-term bearish trend. We see the pair recently attempted to climb back after dipping greatly to near 0.6050, but failed to gain any real upwards momentum. This pullback was mostly responding to USD weakness, and the pair failed to hold above its key 200-day SMA. Now, let's zoom in on the hourly chart to get a clearer picture of recent price action. On the hourly chart, we can see a period of consolidation characterized by sideways movement with lower volatility. We see a struggle to break above 0.6400, a level identified in the news as a critical threshold for further advances according to UB Group. However, sustained pressure from news-related events could easily push the pair lower. A break below recent lows could signal further bearish momentum. For short-term traders, the 15-minute chart provides more granular insights. Looking at the 15-minute chart, we can see very tight consolidation near the 0.645 level. The pair is bouncing between 0.645 and 0.6458, and it looks like it will continue to. Watch for breakouts above or below this range. A break below could signal continued downwards momentum, especially considering the RBA's potential dovish turn and the tariff concerns looming. In summary, AUDUSD faces significant headwinds from potential RBA rate cuts and U.S.-China trade war tensions. Technically, the daily chart suggests a downtrend, while the hourly chart shows consolidation. The 15-minute chart reveals a very narrow trading range. Key price levels to watch include the support around 0.638 and resistance around 0.646. If AUDUSD breaks below 0.638 with significant volume, it could indicate further downside towards 0.63 or even 0.62, especially if the RBA adopts a more aggressive dovish stance. Conversely, a break above 0.646, reinforced by positive news or a shift in market sentiment, could open the door to a retest of the 0.65 level. Keep an eye on RBA statements, trade war developments, and upcoming economic data releases, as these events will likely dictate AUDUSD's trajectory in the short and medium term. As always, manage your risk effectively.